Good morning, consistent traders. Welcome to the daily recap and forecast. Today we've got a lot to talk about, and one of the things I want to go over today that I'll start right off on, start with the most helpful stuff, I guess, is how to trade big news events and how to make good money very consistently on the big news events, okay? So we're just going to start with that today. We had the unemployment rate news event. So there are two. Right now, at least in this market, there are two big news events. There's unemployment rate and there's inflation rate, okay? So here's what we're zooming in on. This blue bar, this is right at 8:30 Eastern time, right when the employment rate was released, okay? So that's the moment of the news event. We're looking at the 1 minute chart right now. So here's the strategy. It only works with these. It doesn't work with all news events, and it doesn't work with all high impact news events. It mostly just works with the really big ones. So like I said, employment and inflation rate. But I've been watching these news events. Not my sample size isn't massive. I've been watching them for about 8 months or so. There's it happens twice a month, so there's 16 data points here, and I've seen it do this every single time. Okay, like literally 100% of the time. 16 out of 16. I'm sure I wouldn't be surprised if there were other times in the past where it doesn't do this. But so far, this is what I've always seen it do. Okay. So you can ignore these green trades here. We just want to be looking at these 4 candles. Okay. So what happens with the news event is the moment it happens, the moment the news event, the numbers are released, you could say, there's a massive spike. And within the first 1 second, even half a second, there's a part of a spike, and then over the next 10 to 20 seconds, the spike continues, and you see some really kind of jumpy volatility. But this is what that is, okay? So within 10 seconds, or within 1 second, we were right around here. 10 seconds, 20 seconds, all the way down to here. And then, so that's phase 1. Phase 1 is the spike. Phase 2 is the retracement. And every single time I've done this, it retraces at least to like the previous low, or wherever it's breaking, if it breaks high to the previous high. So it retraces at least to here. That's, 100% of the time, pretty much, it retraces at least to there. And then like 90% of the time it retraces back to where it started, okay? And then maybe, I don't know, 50% of the time it keeps going and it really goes high up. 50% of the time it comes back down, right? But we don't need to worry about that. What we need to worry about is the 100% of the time it at least comes to here and 90% comes to here, okay? It doesn't necessarily, so in this situation what happened is the spike was here, and then over the next 30 seconds, it started coming up. You can see that closed there. And then the next minute, it came all the way up here. Sometimes it takes more time. So I've seen it take 5 minutes, sometimes even more, sometimes up to maybe 10 minutes. If it's taking more than 10 minutes, it pretty much always comes to here within 10 minutes, for sure. But if it's taking more, your initial spike, I don't know, the news event might have been a little different. I haven't really seen it happen on these big 2 news events. So how do you trade this? That's the question. We know what happens. Now, how do you make money off of it? Okay. So my goal is I want to make money on both phases of the event. The initial spike, phase 1, and then the retracement, phase 2. Okay. So the way I do this is for phase 1, I'm actually adding, and you can see them right here, I'm adding buys and sells all within like basically the 2 minutes before, and you can decide how heavy you go based on your account size and your risk tolerance, okay? But in terms of take profits, I'll usually add a few buys, take profits at 5 pips and a few at 10 pips. You could honestly do 15, because look at this. This was a 20. Usually it moves at least 20 pips, so you could do 15. You could maybe do 20. The risk of 20 though is you want this to automatically close. You don't want to be managing these positions because we're talking about 20 seconds here, right? And then the retracement. So if you're focused on managing these positions, you're going to miss out on phase two. And phase two is the biggest, that's your big money maker, okay? So notice here, I have a bunch of buys and sells that I added right here. It came down, and phase one so far was a success. It closed all of our sells right here. There's 5 pips, and 10 must be right around there, right? And that's great. You know, that's, I don't know, $10 or something like that. It just depends what your risk is, or maybe it was 20, I don't know. Part two is as soon as it spikes, and this is why you don't want to be worrying about phase one trades. As soon as that spike happens, you want to start trading in the opposite direction. So in this situation, we had a spike down, so you want to start buying and placing your buys. And again, what I shoot for is I shoot for rough between 5 and 10 pip wins. For these big events, though, employment and inflation, I shoot for 10 pip wins because, like I said, it pretty much always comes down more than 10 pips, usually around 20. Sometimes I've seen it spike 40 pips before. So just know that it's a big range. Make sure your stop losses are kind of increased so you don't get hit on those on the spike. So anyway, I start buying. You can see all of these green buys right here. There's my first one, second one, and then I really started. And you don't want to jump in too heavy too soon because, like I said, if this goes 40 pips and you load up too much, you know, your account can be pretty upside down. So I go in a little slow at first, and then I start building, and I start putting more and more of these trades on. And these are bigger trades, all with 10 pip wins, okay? Now, I actually had a chance here where I had all of my buys in, and things slowed down a little bit. And so I started pulling these, So I started pulling some of these wins up here to, I think, below this point and below this point, so I could just make a little bit more money than 10 pips on them. And lo and behold, within the next 3 minutes, now it was quicker today than usual. Usually it takes a bit, you know, around 5 minutes, but it came back up here, and we got all of our trades closed. And then at this point, we actually close out phase one. All of these buys, we wait for it to do its reversal, and then we close the buys at a break even. Okay, I wouldn't recommend hoping that it'll go the other direction. Sometimes it does, and sure, if you held on 50% of the time, you could make money on those buys too. But you don't want to get stuck if it decides to come back down 30 pips, right? But there it is. Like, that's it. It's like clockwork. It does that every single time. Hopefully that makes sense. You know, you could do maybe some variations of this. You could potentially scalp the volatility down here, for example. So instead of, yeah, man, here's some ideas. Here's some ideas to tweak this a little bit. You could put limit trades down here, so you know they're going to automatically open, and limits up here. So whatever way it goes, it's all going to be automated, all automatic. This is actually good. I might do this next time. This is a good little switch. So now that whole process is automatic. And then you could just do a bunch of scalps, a bunch of, like, I don't know, 3 pip targets, because this volatility through here, it's 2 bars and you can't see it with after the fact, but this was, you know, it's going like this for 2 minutes straight. And so all of these trades, I was just kind of waiting for 2 minutes for it to move 10 pips, but it was moving, you know, 3 pips over and over again like this. And so if I had been putting 3 pip buys throughout here, that would have just been money, right, throughout there. And then my limits could have taken care of this. So that's an idea. Maybe I'll try that out next time. This is going to be a longer video today. Hope you guys don't mind. That's kind of part 1 of the video. And that's the recap too. That's where we made most of our money. I did trade a little bit more here. Normally I don't like to trade after the news event at all, but this was a really strong, you know, like a strengthening US dollar report. The employment rate beat expectations. So I was comfortable putting in some sells. I probably should have gotten a little heavier. I wanted to here, but I kind of chickened out. I was just worried about that big move up. I should have put some buys in there, but that's pretty much the recap. Now let's pivot from there to the forecast. I'm talking a little fast because I don't want to waste your time. By the way, actually, on the note of wasting your time, no, by the way, I was live trading all of this on Twitch. Okay, so this is twitch.tv/consistent trader. Everyone's welcome. It's if you're not familiar with Twitch, it's a free platform. So just come on and watch every morning at the US Open. So 8 a.m. Eastern time, 8 to 10. Okay, so big picture though, we definitely have things to talk about in the big picture. So our bullish run, our poor bullish run, got slaughtered. I mean, it was just so short-lived. Had a young life, died young, kind of sad. But the bears have taken back over completely, and now you can see very clearly we're at these previous lows down here. So let's actually pull up the day chart because that's our most useful chart right now. This move right here, it's a big move. It's a big day. It's a bigger picture move, I should say. And so we really want to watch what happens on the day chart, especially. All of the big guys, all of the big day, not day traders, the D1 traders, I should say. This is their move, potentially, okay? I'm not sure what that gap is. It's a little glitch. So there's two things to watch. First, we have a trend line right here. Sorry, this chart is not loaded properly. Hold on. Let's try refreshing it one more time. We have a trend line, though, that's roughly what I just drew right there. I guess that's just how it's going to load. Okay, so here's our trend line, and then we also, of course, have the previous lows, okay? We've got this previous low, and then, of course, we have these previous lows here. And that's what we're coming up on right now. We're hitting that trend line, and we're hitting that previous low. So there's three options that's going to happen there. You can guess them. It's up, down, sideways, right? One option is it bounces off this trend line, and the bulls somehow take back over and push, and who knows? Maybe we have a leg up. I think that's extremely unlikely because of our fundamentals, right? The employment rate was a double whammy, okay, against the bulls. One, it was a strong economy, which, just generally is like, okay, the US dollar is going to be stronger if the economy is stronger, right? Two is actually the bigger point here. Two is that the Fed has said over and over again they won't increase interest rates until the employment rate recovers to their set levels. Well, this shows that we're recovering to those levels faster than expected, which means that the Fed should raise interest rates faster than expected. And that is this move here, that it was all interest rate. It was all, and it wasn't even interest rate, it was expectations of interest rates a year from now. So if this is going to move those timelines even more, that's just extremely, extremely bearish. So the chance of it doing this on a fundamental level is so low. Even on a technical level, the fact that the bulls failed miserably right here is, still a low chance that we'll see this, okay? And even something like this, I mean, we might see a little bounce, but I'm going to consider that as part of option 2. Option 2 is that we get a sideways consolidation, kind of like we had right here. We might get, something like that. We might get a little box like that, where it's kind of bouncing around. Maybe the box will be just a small, thin box. Maybe it'll be kind of a bigger box. And then eventually we'll break, most likely down, like I said. This situation, the smaller the box is, the more bearish it is. If it's like this, if the bears keep it just right here along that trend line, that's extremely bearish because that means the bulls aren't able to do any kind of push up. If the box is like this and the bulls they're able to make some decent moves off of that, maybe the bulls have a little bit of a chance. Option 3 is that today and tomorrow, well, it's the weekend, but today and Monday, we just blast through here. And frankly, I think there's a chance for that. There's a chance for this. This is really a very bearish move, very bearish news. So there's a chance that we see something like that. So that's our forecast. In terms of percentages, I'd give it 90% chance that it's bearish and we break eventually. So basically option 2 or 3, 90% chance. I don't know between the two, maybe 50-50. I don't know. And then I don't know, a 10% chance that we actually have a bullish move. The only thing I could see causing a bullish move is if some report comes out where the Fed says something that's just extremely bullish, but just nothing's lining up for that right now. Anyway, that's it for today. Sorry, this is a long video, but hopefully this is a pretty helpful video that should make you a good amount of money on this. We're in a $12,000 account. We made about $120 on this one move. That's legit. We almost made, wasn't quite 1%, so we probably made like between $100 and $110, but in 2 minutes on a $10,000 account. That's what I'm talking about. I love these events, and I love this strategy. So good luck, traders. Have a great weekend, and we'll see you next time.